Hello, I'm Bernard Hickey from interest.co.nz and welcome to the Reserve Bank here in Wellington, where we've just had the December quarter monetary policy statement, the first full monetary policy statement from the new Reserve Bank Governor, Graham Wheeler. And no real surprise, interest rates on hold at 2.5%, and no real hint of where the Reserve Bank might go with the official cash rate, up or down. Obviously, the international situation has stabilised a bit in the last 3 months since the last monetary policy statement and since the last decision. However, things are slower in the New Zealand economy with the high New Zealand dollar and a reasonably slow rebuild going on in Christchurch. However, the Reserve Bank says it is watching what's happening in the housing market, particularly in Auckland, where price inflation has picked up in the last 6 to 12 months. However, it's not that worried yet about high loan-to-value ratio lending. The Reserve Bank Governor and the Deputy Governor, Grant Spencer, were quizzed at length about the banks doing a lot more 90 and even 95% home lending in the last 6 to 12 months as competition has heated up. The Reserve Bank says it's negotiating a memorandum of understanding with the government about using macroprudential tools to try and slow the housing market or try and lean against asset bubbles. In particular, it's looking at loan-to-value ratio targets, counter-cyclical capital buffers, and changes to risk weightings for different types of assets, including potentially mortgages. But it's still early days. The Reserve Bank Governor said he had a meeting yesterday with the Finance Minister, Bill English, and there are ongoing discussions between the Reserve Bank, the Treasury, and the government. But no suggestions yet that the Reserve Bank would use these loan-to-value ratio targets. And Graham Wheeler reiterated in the press conference today that even though house prices are rising nationally at around 5%, in Auckland around 10%, and credit growth has picked up to around 2 to 3%, he doesn't see a need yet to use those loan-to-value ratio targets if he had them. So the overall picture is of low interest rates for quite a bit longer. The Reserve Bank didn't change its forecast for the 90-day bill rates all that much. There was a slight decrease in the next 6 to 12 months, but nothing major. The Reserve Bank, though, does see retail interest rates coming off a bit more as competition between the banks heats up. Remember, they've got plenty of profits to play with. And also, funding costs for the bank's own lending internationally have dropped around about 30 basis points in the last 3 to 4 months. So that is a signal from the Reserve Bank that it expects customers to push their banks hard for a good deal on mortgages in particular. Well, there we have it. On the whole, no change in the official cash rate, but plenty of comments from the Reserve Bank about whether it could use other tools such as high loan-to-value ratio targets and what it sees with interest rates, essentially lower interest rates for longer and potentially lower retail interest rates. It also sees a moderation of house prices, but interesting to note, the Reserve Bank Governor Graham Wheeler says he thinks house prices here are a bit expensive, but that didn't stop him buying one in Wellington a couple of days after he got back from working overseas. I'm Bernard Hickey from Wellington at the Reserve Bank with the December quarter monetary policy statement.